right. Good morning, good-looking people. Yeah. Good morning. Comment allez-vous? How are you? Holy smokes, it's a long day already. Oh, my gourd. So anyways, good to see you. Yeah, it's getting a little thick, huh? Anyways, hey, good to see you. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of helping you plan your trades in advance, because trading is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. So my name is Wayne. I've been a currency trader for just over 20 years. Before that, I was a venture capitalist and a high-tech entrepreneur and coach to startup CEOs. I worked at companies like Apple Computers, Cisco Systems, and NASA. Sat on a board of directors with George Soros. And I think that's it. I don't know. I think that's it. Good enough, though. But so I bring a lot to the table. I have a formal education in economics and finance from an Ivy League school, so I guess bring some credibility. Yeah. So I've done a few things, achieved a few things, and I want to boil it all down to I got to this point where I'm here to serve you. So let me know how I can serve you today. Technical analysis, fundamental analysis, please let me know. And I will do my best to help. Simple enough. We'll leave it at that. Very simple. Very, very simple. One thing I want to point you towards is tradersway.com. Look, live webinars by Wayne McDonald. They're a foreign exchange broker, Traders Way. I believe them to be ethical. I've been recommending them for many years, and therefore they recommend me over the last many years. I honestly believe them to be ethical and trustworthy. So if you're looking for someone to execute your trades into the interbanking system and not play funny business against you, then I think you should check them out. Do your own due diligence. Open up a demo account. But nonetheless, I recommend them. And if that holds any weight, start your due diligence there. Awesome. So I'd like to thank everyone that was part of last night's Stop, Look, and Correct session at Investor Bootcamp. I had a really good time. I came out of that tired, but enthusiastic. Can you be enthusiastically exhausted? Oh, I was exhausted, yeah. But enthusiastically so. So I don't know. Thank you for being such an amazing community. Really, truly, honestly, good stuff. Okay? Yeah. Coolio. If anything, I want more people to attend. Yeah. So I appreciate that. Yeah. Lucas says great class. Thank you, Lucas. So it was interesting because it wasn't a big class, though. Like, what, 16 people or something attended? Like, it was really small. Usually we get more. I don't know. Life's complicated. It's summer. I get all that. But what happened is, out of 16 people, I think about 6 people posted a trade plan, maybe 8. And so we reviewed those trade plans. And it was great. We had a great conversation. I only agreed with maybe half of them. So I think that's the best feedback ever, where I'm like, okay, let me try to think about why I disagree, right? Not that I'm right. It's more like, what do I think about it? So I try to explain that. So anyways, but then we ran out and I could have walked away and we were saying goodbye. And then I'm like, you know what? I don't want to leave. So I pulled up Tradeplans.ai. Most of you haven't actually seen the back. Tradeplans.ai. Most of you haven't even seen the back office because I only show you the homepage. So, but what we ended up doing is I just went through plan after plan after plan after plan on Tradeplans.ai and gave feedback. So I'd look at this, we would talk about it, and then I voted. And actually, I voted yes for this one. So very cool. And what I think we all saw, it wasn't intended, but what we all saw very quickly as I was burning through these trade plans and gave feedback, it's really, really powerful as a learning tool to see what other people are seeing. Think about what you like about their charts, both how they have the charts set up, but also how they interpret their charts. What do they have that you don't have? What are they missing that you normally would see? And you think about it like this, like someone, see, it's anonymous. Nobody knows who posted this. Someone is selling euro dollar and they want to know what you think. So they're selling at 109.65. What do you think? 109.65? Yeah, a little late, but not wrong. So, right? So I look at this, oops, and I see what they're thinking. Okay, and they're targeting a little lower than that. It'll probably take them a little longer, but I don't disagree with that. And I probably prefer not euro dollar, because I think if euro dollar fell, I think something else like Kiwi dollar or Aussie dollar would fall even more. But nonetheless, I don't disagree with it, so I'm going to say yes. And that gets tracked in your history. So here's a trade plan I posted several days ago. Sell the S&P 500 at 45. We're still kind of farting around 45. This is what my chart looked like. And so far, 3 people have agreed with me. Now, it's an older trade, so I'm not likely to pick up more agrees or disagrees. But nonetheless, it's cool. That gets tracked, but nobody else sees this page. This is private to only me. And all of this stuff is anonymous. So it's really powerful if you just like look at this trade plan, think about it, vote. Look at this trade plan, okay? Think about it, vote. Think about this trade plan, think about it, vote. Think about this trade, right? And then vote. And you can see the power of learning by analyzing all these charts. The muscle memory is epic. Okay? Okay? Epic. Like, amazing. So this is a free service. You should check it out. You should use it. Hey, welcome to Tradeplans.ai, where you can get feedback on your trading idea in less than 3 seconds. You fill out the form,
I'm just having
you hit
coffee.
submit, and our trade plans will already be in your email account. In fact, when you open it up, you will see that there's a trade plan for daily, for weekly, and monthly. And again, we can do this in less than 3 seconds. Now, how is that even possible? Well, of course, I'm utilizing artificial intelligence. So my name is Wayne McDonald. I've been trading for over 20 years, and I've been teaching artificial intelligence on how to trade. So when you submit a trade plan, we have thousands of candlestick data points in which we can analyze using dozens of algorithms and help you put together trade plans. You can take what you thought with what the artificial intelligence is thinking, and you can compare and contrast. But here's the cool thing. We also track the trade over time so that The machine is learning from your wins and your successes, or in your failures, or its wins and its failures. And the more trade plans you upload and the more trade plans others upload, the better the feedback gets. So give it a try. Fill out the form, post a trade plan, and check your email. There's already 3 different types of trade plans for you to compare and contrast with your own. Try it out. It's awesome. And we've added now S&P 500, NASDAQ, Dow, DAX, Nikkei. We can't get FTSE, I'm sorry. We have all the Forex pairs, including Hungary if you trade. And then we have crypto too, Ether, Bitcoin, Ripple. Okay, and we're adding more assets every day. So check it out. It's totally free. It's super fast. It's super easy. And yeah, I expected some more updates here and like, damn it, they didn't update it. But anyways, yeah, you should check it out. I mean, it's getting better and better and better and better and better and better and better every day. Okay. All right, can I talk about the Bank of Japan recent decision? You mean like a week and a half, 2 weeks ago? Is that the one you're talking about? Let me know. Yeah, I mean, I talked about it 100 times already, but can I give you the fast version? I mean, that's so old. It's so funny. I'm like, 2 weeks ago, that seems like a million years ago. Oh, sorry, man. It's a long week, long day. Oh, my God. Yeah, here's what it means. What was the decision? Test the waters. Did they throw out yield curve control? No. All right. Did they adjust it? Well, they said they wouldn't let it get above 1.0. So they kind of just said, okay, market, tell us what you're going to do. And they were worried that overnight, almost instantly, the yield on the 10-year Japanese government bond would go from 0.5% to 1%. That's what they were worried about. Maybe even beyond that. Okay? Maybe it goes even higher. They don't know. But they were worried about it. So they're like, look, we're going to be flexible here. And if interest rates double overnight, we're going to push it all the way back down. They said they would not let it go beyond 1%. They didn't say they wanted it to go to 1%. They said they wouldn't let it go beyond 1%. And they'd probably push it all the way back down and squash it. But they want to see what would happen. Now, why would they care about that? Well, their number one competitor is China. And China is in a situation where they might let their currency appreciate. And so there was less need for a moment there for Japan to have such a weak currency. So they decided, well, could they allow a little more strength? Not too much, but just a little bit. So they did an experiment. And overnight, interest rates or the yield on the 10-year Japanese government bond went from 0.5 to 0.65, and then back to 0.6. Did it go to 1%? No. Did the market freak out? No. Did interest rates go up 100% overnight? No. They went up 10% overnight, all the way to 0.6 instead of 0.5. Okay, that's 20%. But nonetheless, perfectly fine. So they just allowed a little more flexibility. See, the Bank of Japan was buying unlimited amounts of JGBs at 0.5. Maybe they didn't need to buy them. So they just relaxed a little bit to see what would happen. And sure enough, there was no panic. Okay. Santiago, the The scatter plot is like a real-time now measurement. So if there was an error by a service provider of the data, because remember, we pay for the data, live data, from a service provider. So if the live feed had an error in it, yeah, you're going to see it there. And then it would, it'd come back. It'd be wiped out over a short period of time. So if that happened, all I can say is, yeah, sorry. Yep. Probably what you observed is someone was working on an update. Because I believe yesterday I found the technical analysis on the 10-year T-note, now thinking about it, right? Had a failure. So I contacted the developers. I'm like, dude, you need to fix this. So I think what you might have seen is they were fixing, and them fixing it might have popped it on the scatter plot because they are related, right? So maybe that's what it was, more likely thinking about it. So it just happened to be because somebody was messing around with the data. So sorry about that. Oh my God, I'm putting my feet up. I hope you don't mind. I got my feet on my desk. Okay. So anyways, going back to the Bank of Japan, have they ended yield curve control? No. Are they allowing maybe the Japanese yen to be slightly stronger? Yeah. Notice, though, they might be subscribers to Quant-in-a-Box. You think that Bank of Japan is a subscriber to Quant-in-a-Box? Well, they might be, and notice that this time of year the Japanese yen gets strong, so they're like, maybe we can allow it to float with a little bit of strength, and we can save some money, and then it should naturally weaken later. Well, that would be smart of the Bank of Japan, but no, they're not subscribers, but maybe they should be. Thomas says, long-term euro dollar, what do you think? You mean for what, the next 5 years? How about the next 18 months? Okay. Well, I want you to think about it this way, and then you can answer it yourself. Will the Fed cut interest rates next year? Yeah, right, Sky Killer. Yeah. So will the Fed cut interest rates in the next 2 years? In the next 1 year. Let's say by 2025, so 18 months. Will the Fed cut interest rates? Okay. Now the Fed says they do. So, right, do you know when the Fed says they're going to cut interest rates, Thomas? I just want to make sure we're on the same page here so we can have a conversation. When has the Fed told us they will cut interest rates? Well, don't say things like they have to. They don't have to do crap. They can do whatever they want. They don't have to follow a rule book. They're the ones in charge. They don't have to do anything. So don't think that way. They have to do this, they have to do that. They can do whatever they want. They can make mistakes. It's not illegal to make mistakes. So what have they told us? What do we know to be factual? Now, we might get a revision in September, but what have we known for 9 weeks already? Oh, okay. Third quarter of 2024. Okay. It's already a fact. It's a fact. Everybody that is a pro subscriber of Quant-Box, I haven't even shown you Quant-Box. Everyone that's a pro member of Quant-Box knows this to be factual. Now, we're awaiting revisions, but there's no debate. There's no like guessing or there's no speculation of what could or should. We only know what we know. And we'll let the Fed decide have things changed or not. Okay? What do we know about September? What do we know about September 20th? I think it's the 20th. 1 month from now, just over a month, 5 weeks from now, the Fed is having a meeting. Are they going to raise or are they going to hold? See, like, instead of me telling you what I think, who cares what I think? I want you to know the facts. You need to decide what you think, right? But if you don't know the facts, then it doesn't matter. I can tell you the future. You're still not going to do it. It doesn't matter. You have to believe it yourself. You can go. Typically what happens is an amateur will go around and ask 10 people their opinion and then do whatever the hell they want, right? And not follow anyone's opinion. So you just have to get to your own opinion. Okay? Come on, guys. So what's going to happen in September? If you don't know that, then you don't know how to play this. Skykiller says, Fed Watch Tool says 80% say hold. Who cares? Once again, that's someone else's opinion. I've watched the Fed Watch Tool be wrong almost all year. So don't give me that. Once again, that's not a fact. That's somebody else's opinion. Give me a fact. Are they going to raise or not raise according to the facts? Feel free to answer, everybody. Well, Sky Killer, be careful with the language. You don't say things like they're supposed to, this or that. Change your language. Say it properly. You'd only get half marks for that if I was grading you. I'm like, you're not wrong, but the wording is horrible. Okay? They said is better. Thank you. Thomas is maybe. No. There's no maybe. You have an opinion. Okay. The Fed told us one more cut. Okay. By the end of the year. So is it going to be September, November, or December? Oh, sorry, I said cut. Sorry, raise. They told us one more raise by the end of the year. Will it be September, November, or December? Well, what's the pattern? What have they been doing? Raise, pause, raise, pause. What's the next one in the cycle? Okay. So by the end of the year, there will be a rate hike. I was going to ask it as a question. I'll just make it as a statement to save time and energy. The September meeting will give us a new summary of economic projections, and Quant-in-a-Box will update its facts with new facts. Okay? Richard says if inflation picks up, there'll be more raise, right? More hikes. Well, that might be true. And it might be oil that does it. But once again, you're using the logic of what would you do if Richard was in charge of the Fed? Irrelevant. This is where people go broke because they start betting, and I'm not saying you're doing this, but just in general. People bet, aka invest, or trade based on what they think is right or wrong. That is irrelevant. The market can stay irrational longer than you can stay solvent. So what we'll find is an update to the summary of economic projections in September. That's it. But yes, oil prices are going up. So will they discuss that in September, at the September meeting, if oil is at $90 a barrel? Heck yeah. And they might have to say, ooh, we're very concerned about inflation going back up. So they raise it. Raise what? Rates? No, their summary of economic projections. And then we will make our decisions. But we don't want to make our decisions on what we think is right or wrong, good or bad, pretty or ugly, if we were in charge, so on and so forth. We trade the facts, and that's that. Okay? So get the facts. Okay? Be clear. Be very clear. Cool. Okay? This is the time of year where we should expect sideways markets. Are they sideways? Yep. Cool. What about this one? Is this one sideways? Nope. Now, I highlighted this one for you before it happened. I discussed why euro would be bullish versus the other assets. I used technical analysis to confirm this over here. There was indeed a big drop. It did rally, and yet the other currency pair I just showed you didn't do anything like this. Well, this one's different. Now, why? And it's my 18-month outlook for the European Central Bank. And by outlook, I mean I compared and contrasted the the current and expected future monetary policy of the ECB relative to the other major banks. And I made a determination. Now, we also identified this level as a potential. It wouldn't have mattered. It all happened in the same day. And yeah, winner, winner, chicken dinner. Now what? Stage 2 of this plan is something like that. Okay. Cool, right? So, can you buy it now? You are slow as molasses on a cold Georgia morning. If you wait for it to rise to resistance and then buy it because you don't know what's going on, then you are developing bad habits. But you make decisions on smaller time frames. So let's try to do this. Okay? Up, 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 down, down, buy. Consolidation. Up, 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 down, down, buy. And you want to keep going until it fails. So you get the up, 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 down, down, and here's the consolidation idea. Okay? And then you have a new higher high. What have I taught you at Investor Bootcamp over and over and over and over and over again? Simple price action. How many people here have completed the price action course at Investor Bootcamp? Sky Killer, anybody else? Jeffrey, Frankie, Jim, twice. Harvey, yeah, cool. Okay. What you do is you look left. So you're up here at the moment. All you know is there's a higher high. You look left and you drag this across. And somewhere in here is your buying zone. A guide, a general guide. How many people can confirm that this is a basic tenet of price action trading that you've been taught over and 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 over? Okay, cool. Okay, so you go, so you should be long there. Bulls buy dips at support. Is that a dip? Yep. Is that support? Yep. Yep. Oh, for sure. Cool. Now what? Well, if you're lucky, because we don't know the future, okay? If you're lucky, it'll make a higher high at some point. Maybe it'll take a while. Maybe it'll happen quickly. But nonetheless, your next opportunity as a bull is to wait for the higher high and anticipate buying it somewhere around here, like you did here. Okay? Cool. But recognize that much more likely currently than before, we have on a higher time frame a bit of a pullback and fade. And do the same patterns that you see here on a 15-minute chart will happen on a hourly, even daily chart. So you got to allow for that to happen. So on a 15-minute chart, right, you're looking at this higher high. So you're thinking, all right, in the next 2 or 3 hours, there'll be a dip to old resistance that'll become support, and I'll buy the dip. But what about this pattern What if it's set up on a daily chart? Well, then it might fall for 3 days. 3 days it might take to do a little dip like this, and then someone buys it and it goes back up. And meanwhile, if you're only on a 15-minute chart, what happens is you buy the dip, buy the dip, buy the dip, buy the dip. Okay, sell the rip, sell the rip, sell the buy the dip, buy, and you get lost in here, and you don't realize it's just double topping and dropping, and you're enjoying it here, you're losing here, so then you start to sell, then you're losing there, then you start to buy again, and then you're losing here, and you have 4 good trades and 6 mediocre to losing trades, and then you end the whole period discontent. Okay. Andrew, first of all, B of A, whatever. I want you to understand the logic. The logic has to do with opportunity cost and hedging cost. So if the yield on the 10-year JGB suddenly was 2% versus what actually happened, it only went to 0.6% from 0.5. Okay? Well, there would be a much different response. Okay? And what about the US dollar? What about later in the year? If the US dollar falls, okay, that might also impact. Because Japanese investors are looking for a higher yield without the risk, so they have to move their money out of Japan, make an investment, and hedge the currency risk. Okay? Oh, Richard. Higher wave, medium wave, lower wave cycles. Oh, I just... Blah. Blah. Oh, I just... Blah. Oh, all right. So I'm glad maybe I confirmed or denied something, but I don't even want to hear it, man. To think that I would manage my money because I think this is a wave 3, and then this is going to go into an A, B, C, and then, and then into something else, or actually wave 3 wouldn't do it. But this idea that I'm counting waves and making investment decisions makes me nauseous. This wave predicts the next wave. Oh my God, I really don't like that. It churns my stomach. I want to think about why money is moving from country A to country B. Why is money moving from, let's say, Australia to Switzerland? Okay? Why is money moving this direction? This is how I think. I'm a businessman. Okay? So the waves are just technical analysis, and I really don't care what technical analysis you use. Don't care. It's just a tool for making decisions. If you know how to drive a stick shift, do you really care about what car it is? Doesn't matter. So I focus on why. I do not focus on patterns. Okay, maybe patterns in fundamental macro data, but not chart patterns. I couldn't care less if you think this is a C wave of a B something, or a 3 of a C of a world. Oh my God. I don't care if you place extra importance on a doji, or you saw a 3 pregnant nun pattern, and I just don't care. Dude, is this going up or down? Okay. And where's the next level of resistance? And where was the previous level of support? That's what I care about. Okay. So I know, and I'm not picking on you, and sorry if I come across like I am, Richard. So, but I am trying to be clear, because I am trying to get my point of view across. So obviously this is an opportunity for me to do that. If you don't know why this is going up, counting waves is a total waste of time. You're like, no, but it's not a total waste of time. Oh, whatever, but okay. It's like, do you know what this vertical line means? First of all, let's talk about that. Who knows what this vertical line means? I put it there, I don't know, 2 months in advance. Who knows why I put a vertical line there? 2 months in advance. Yeah, I know, Richard, but still, maybe I overdid it. So I apologize, Richard. Okay, I apologize. No, but why, guys? Yes, you're telling me what it is. Who cares? Canada Day. Who cares? What's the point? Seasonality? What? What seasonality? It's the day I expected euro yen to fade. I don't really care about the third quarter. Okay? The time that it often changes, as Jim said. Yes. A time to expect euro yen to come down. Weeks and weeks and weeks and weeks in advance. Sweet. Good to know. Now, what is this area then? Let me do this in blue. What is this area then? Support. It's the old, okay, based on this high up here, that's the previous highest high. Current high, previous high. Drag it across, buy zone. Knew that weeks in advance. Okay, so now I'll zoom in a little bit. I broke it down this way, just so as a reminder. Let me do this in yellow again. It's easy to see. This was a plan A based on a different time frame, and this is the main plan. This was a daily 21 or something. So it's really the zone between these is really the zone. Okay, cool. So my point is, now we're here, and now you want to start trading. Really? Huh. All right, well, you do you. So now you're betting that it's going to make a higher high, like you did here maybe. Well, that would have been a bad bet. But how about when you have a high, you do something like this, and you buy at the support instead. How do you identify that? Well, here's the old highest high. Drag it across. Cool. Somewhere around there. Or how about off the moving average? Or how about off the fib zone? Or how about off the daily pivot? Or how about at the bottom of the distribution. I don't care what you use. There's 10, probably 20, probably 30 different tools that you could use that will tell you the same thing. But if you don't know it's going up, then it's irrelevant because you could probably find 30 things to tell you to sell it. Do you understand that? How many people get this concept? If you just cycle through your tools, you can get your tools to tell you what you want it to tell you. I can give you 30 reasons to sell it, 30 reasons to buy it. Yeah. So what if you have no frickin' idea? You're going to get conflicting information. You'll find 15 reasons to buy it and 15 reasons to sell it. So why don't we just get to the point where you've made that decision to buy it or sell it? And then you actually just do it. And then you use a stop loss to manage your risk. Well, that's the whole point. An amateur doesn't think that way, and a trader does. A professional trader does. You have a point, you're going to trade it, and if you're wrong, you're going to lose a little bit of money. But you're not afraid of losing a lot of money because you're not going to buy 5 or 6 or 7 or 8 dips. You don't buy lower lows. Do you understand that? Come on, guys, get into it. If you're a bull, you don't do things like this. Watch. Here's what bulls don't do. Buy, 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 buy. That's what amateurs do. Institutional/professional traders don't do that. So they're never afraid. They might buy the first one, but they don't buy any of the others. You understand that? A bull doesn't buy lower lows, ever. Amateurs do, and they lose money. And they're like, well, I saw, the 3 pregnant nun pattern. Oh. My MACD told me to do it. Huh. It was a B correction of a 3-wave. Richard says that's dollar cost averaging. No, that's called bankruptcy. There's only one thing a bull can do. Okay? Buy higher lows. Okay? A bull can buy this. A bull can buy this. A bull can buy this. And a bull cannot buy this. A bull cannot buy this. A bear cannot sell 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 this. A bear can sell this. And a bear can sell this. Everybody else is broke. Everybody else is a liquidity event. And the only way you could be prepared for the dips or the rips is that you filter out all the other noise. Do you know the fastest way of filtering the noise? The fastest and easiest, most profitable trading tip I can give you. How many people would like to know this? How many people would like the most profitable, easiest, and fastest trading tip I could possibly give you? That anyone could give you. I'll give it to you for free if you click the like button. Okay? Not enough likes. You have to impress me. If you don't care, I don't care. I'll keep it to myself. No, half of you haven't clicked like. Forget it. Forget you. Right, Jimbo? Come on. Not enough. Kick down, come clean. Don't be a holdout machine. Thank you, Rizwan. Liam's like, I'll leave a comment too. I appreciate that. Thank you. I mean, come on, tell YouTube this is good stuff. I'm trying to give you reality here. I know there are kids that are getting you into trades. Trade, 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 go, go, go. Look at me, I'm rich. How many of those YouTube gurus that are teaching you how to get rich quick, how many of them own a house, raise children, save for retirement, have a retirement plan? I mean, like, dude, they're kids. Yeah. Anyways, but they're getting rich on YouTube. Good for them. Nice little hustle. All right, let me tell you. The fastest, easiest, most profitable tip I can give you as a trader and investor is to flip a coin. Okay, so let's look at the yen pairs. Okay, between now and the end of the year, okay, you flip a coin. Heads, you're bullish on yen pairs. Tails, you're bearish on yen pairs. Flip a coin. And now you're done. I made you a genius fundamentally. Yep. Flip a coin. Now, whatever it is, that's your bias until the end of the year. I don't care if you're bullish. I don't care if you're bearish. You'll probably make money. The fact that 95% of retail traders don't have a bias, either they haven't made a decision or they don't know how to make a decision, it doesn't matter. Ignorance or incompetence is irrelevant. Nobody cares. Professionals love the fact that retail has no idea what's going on. Good. Run them over. You think your broker's chasing your stop? Professionals are chasing your stop. Actually, they're not chasing you. They don't give a dang about you. You're too small and too irrelevant. They're just running you over. You're just in the way. Nobody cares. Okay? So you throw down, and I'm not talking about you. I'm talking about the invisible you, the aggregate of retail. Okay? They're just in the way. They're trading at the wrong time, at the wrong position, for the wrong reasons. You're just in the way, and you just get run over. Nobody cares. They don't even stop to look back. Did I just run somebody over? You're irrelevant. Some guy's got, or some gal has $100 million on a trade. One person has $100 million on a trade. They're leveraged 4-to-1, not 50-to-1. And they plan on being in the trade for 18 months, and you're in it for 18 minutes. They don't see you. They don't perceive you. You're an ant, and somebody stepped on you. Well, the somebody didn't even know they stepped on you. Okay? That's the problem. All right, so let's go back to this. You flipped a coin and you're a bull on euro yen. You don't know why, you don't even care. You're a bull on euro yen to the end of the year. So, what do you do? The market does not move sideways. The market does not move down. That's according to your bias. So if your coin said you're a bull, now you're a bull. What can you do? You only buy dips after higher highs. And if it makes a lower low, you don't buy. And if it makes a higher low after a higher high, you buy the dip. So you can buy this, you can buy this, you can't buy this, you can't buy this, you can't buy this, you can buy this, and you can buy this. And you're like, but wait, that's Elliott Wave. I'm like, oh my God. Okay? Richard's getting mad at me probably. He's like, I wasn't talking about Elliott Wave. I know. But, again, Richard, I got to grab onto something and teach, right? So anyways, that's it. If you don't have the patience and discipline to do that, that's your problem. And if you're a bull and it does this, guess what? Look at all the money you're not losing anymore. Andrew's like, yeah, he's seen other groups that do analysis with a completely different kind of scenario. But what I do lines up with what large institutions are doing, right? Now, Andrew said banks, but it's that's where I disagree with your group. Banks don't do this, but I can imagine them saying banks. It's institutions. And like banks don't have those kinds of trading desks anymore, but they do things. And yes, and there's rationale and reason behind them. And other large like hedge funds, pension funds, insurance companies, import-export, international corporations, endowments. Yeah. So it lines up. So Andrew's just confirming. And the reason for it, Andrew, is I'm actually doing both. Well, so like Richard says, banks don't have charts. Well, yeah, I'll go with that. So anyways, let me finish on this. If you know what you're doing and you know how to do it and you actually do what you know how to do, then you'll be successful. If you buy lower lows as a bull, you fail, you're going to go broke. Good luck. You might be smart enough, but you don't have the discipline. It's not your fault. It's your mother's fault. It's okay. You can blame her. And you can go learn how to flip real estate and get rich that way. But it won't work either. Then you can try, drop shipping on eBay and Amazon. But that won't work either. And at some point you might have to say, ooh, maybe I should have the discipline to carry out the strategy. Yeah, that might be it. Okay? But that you have to look yourself in the mirror and make that change. And nobody likes to be 6 inches from the mirror. Okay? So the next side is, could it possibly be so easy of flipping a coin? Well, let's talk about that for a second. Okay? Let's put that into perspective. Let's say over the course of a year, you were a bull. And the only thing you ever did, ever, throughout the entire 365 days is buy higher lows in an uptrend. Are you patient enough to wait for higher lows in an uptrend? Yes. Are you disciplined to actually carry out the trades? And the discipline also is to not do anything else when you're wrong. To be in cash. To be in cash is a position. Not trading is a position. So if all you did was buy higher lows in uptrends and you did nothing else, the rest of the time you were patient and disciplined to stay out. Are you patient? Yes. Are you disciplined? Yes. Are you consistent? Yes. Are you profitable? Almost certainly. I can't give you a guarantee. That would make me a fool and negligent. But what do you think? If all you did was buy dips in an uptrend, and I don't care if you're talking about a 15-minute chart, an hourly chart, a 4-hour chart, a daily chart, I don't care. If all you did was buy dips in an uptrend, so now you have to figure out, is it an uptrend or not? No, it's sideways. Then you don't do anything. And then one day you say, ooh, look, a higher high, cool. What do you do now? Well, maybe later I'll buy a higher low. Where's the higher low? Where's the old resistance? Drag it across. There's support. What if I use Fibonacci? What if I use pivots? What if I... Great, you use whatever you want. Oscillators, moving average crossovers. They're all the same, guys. They're all the same. So anyway, so now you're in the business of buying a dip. You buy a dip and let it rip. Sweet. If all you did, what do you guys think? If you boiled your trading down to simply buying dips in an uptrend and never doing anything else, would you be profitable at the end of the year? Yes or no? Yeah, I'm waiting. Yeah, this is where you actually talk to yourself now. This is where you coach yourself. And if you don't know how to identify a higher low, $88 will solve your problem. And if you say, well, this guy is only trying to get my $88 so he can get rich and buy a Lamborghini or fly in a private jet or hang out with models and bottles, then you have a mental and emotional problem that I can't fix. And it might be the thing that's in your way. Or if you don't have $88, then you're locked into an economic society in which I don't think I can help you. You'll have to find your way over that wall, whether it's emotional or structural, if you will. But I'm here for you. That's why I do the free stuff. Now, for everyone that didn't answer, I have a giant question mark for you. There's no question. I'm like, you didn't answer that? You don't understand the importance of you not answering. It's so psychologically deep for you to actually answer. Because you have to overcome a lot of obstacles psychologically to be able to answer it. You're like, oh, this is just a live stream. Then you're discounting everything I said. Or you're afraid of what everyone else will think of you. Well, then you're afraid of what everyone will think of your trades. You might not ask me for help. You might not post a trade plan. You might not take a trade. Even though you're totally invisible, you're like, well, what if it's a bad trade? What if it's a wrong trade? These are big psychological challenges. So I expected dozens and dozens of people to answer. If all you did was buy a dip in an uptrend, would you be profitable at the end of the year? Wow. You should be able to say, well, I might look like a fool in front of YouTube right? YouTube viewers, or I might get it wrong and Wayne might heckle me. You had to overcome that fear, like speaking in front of the classroom because your teacher called you out. Well, that is a big fear, so you need to be able to overcome it. So I worry about for the dozens of people that didn't even answer. The answer, of course, I believe is yes, of course. So I can help you overcome these challenges, many of them. But ultimately, you have to do it. You have to learn it, okay? And you have to become it. And that's your journey, my friend. Yeah, that's your journey. It's worth the effort, by the way. Okay, not only can I fix you, but we have a whole community of like-minded people working on the exact same things over months, years, and even decades. We know you because we are you. We get you. You are not special. You are not unique. We are you. You should join. Skykiller says, how long am I in front of the charts? I'm not in front of the charts hours and hours and hours and hours and hours and hours. Yeah. I'm constantly doing research. I'm constantly analyzing the charts. I do hours and hours of live streaming every day, so I'm pretty caught up. Do I sit in front of the charts for 18 hours a day like I used to? Like literally sit in my chair for 18 hours a day? No, I do not. Do I come and go constantly? Yes. I move around is actually kind of a helpful thing. I move around a lot in my space. So very often I'm outside and at my desk, upstairs, in the front. When I travel, I bring stuff with me. I have my phone. So look at my phone. Some of you guys might like this. I'll take my glasses off. Where's my drawing tool? So here's like a trick. Oops. A trip or a hack? Okay, here's a life hack. Okay. So you can do like, let me open this up. Okay. You guys got something like this on your phone? Cool, right? Nice. How about this? Huh? Better, right? Yeah. Those are two charts, by the way. Two different charts. Okay. So, and I think you can read that. Anyways, can you see it? Is there anything vulnerable here? No, guess not. You can see it there. It's hard to see, right? Here's the peso trade. So the answer is, do I sit in front of my charts all the time, or how many hours? I'm constantly aware. I'm constantly focused. I'm constantly doing research. Okay? Okay, I'm constantly, but am I in this spot all day, every day? Hours and hours and hours a day. But I'm able to move around as well. Yeah. Yeah, Greg, I don't see any deleted messages. I'm like, I don't remember any of your messages. I'm scrolling up. I don't see any. I don't see any of your messages deleted, which is interesting. Okay. So anyways, so yeah, so that's cool. So I have laptops. Where's my laptop? You guys see my laptop, right? I think I have it here. Where do I have it? YouTube.com. I think it's on FX Bootcamp, right? Community. Yeah, you've probably seen this. Oh, stupid. Oops, I just voted. Okay, amazing. Yeah, I can't zoom in anymore. That's weird. How come it won't let me zoom in? Interesting. So let me maybe do this. Look at this laptop. So this is my laptop, my current laptop. It's got 1, 2, 3, and 4 screens. 1, 2, 3, 4 screens. Notice that this laptop's not plugged in. These are just the cables. You can see there's nothing over here. This is literally, I could be fired up at Starbucks. And so, you see, now I'm showing you here in this picture. Oops, delete. You see this? It shows you the setup. 1, 2, 3, 4 screens. Now, what's the point of that? Well, I can travel and bring my quad setup with me. Okay. So now the question is, so someone asked, So I look at my charts constantly. I probably work close to 18 hours a day, but I'm not sitting in this spot. Now, I used to do that. So what do I do now? I spend a lot less time on the 5-minute chart unless I'm ready to pull the trigger. I used to trade the 5-minute chart as a setup, like I would scalp and spot. I spend most of my time now doing day trading, swing trading, and position trading. So it's very rare that I'm in a trade for an hour or two and pick up 30 pips. It's not my intent. That's just not, I found after doing that for a long time, it's not worth my time. My trades are bigger now. So I spend more time preparing my trades, setting things up, and then executing that. So, okay, so my job now is to notice that we're here. So instead of maybe selling for a few hours, right, because this will probably take a couple of days and it'll do it like this. Instead of being inside some of these smaller moves, I see my job to be ready, willing, and able to take this trade. So my job is kind of be aware, I'm watching it. Then it gets down here. And now maybe I drop into a smaller time frame and I kind of look for a pattern like this. And it might be a 5-minute chart, it might be a 15-minute chart, it might be an hourly chart. And I get one of these trades and I'm done. I take the shot. 2 days later, I move my stop from here to break even. And now we're up here. And I just let it run. It takes a lot of preparation. It takes a lot of research. It takes a lot of thinking. But I'm able to now analyze a little bit and say, trading this isn't worth my time unless I'm really just doing it kind of for fun, while I'm waiting. But knowing that I have intention, strategic intention for that. And by the way, short-term selling versus long-term buying is the same amount of work. So in this period, I might say, I'm going to be in the backyard, farting around on my laptop, doing my research, doing my side projects, consulting with hedge funds, and all this, the lovely things I do. But then when I'm in this case, I'm too busy for all of that. Daddy's in the office working. So I'm concentrating now on this period of time. And I'm not here 18 hours a day, all day, every day. I'm at my desk 18 hours a day that day. Okay. Oh, right? You need me to build a screen table, right? A screen top coffee table. You build those? That's cool. I'm lucky enough for the last 15 years to have movie theaters in my house. This is my second movie theater. So I'm lucky to say I can sit in a fully electric, very high-end leather movie theater seat with my feet up. With my head, there's even a pillow that supports my head, so even the neck rest is electric. And I can be, 25 feet away from the movie screen. The movie screen is 4K and 120 inches. So you should see the Super Bowl. It's insane. I don't do it often, but it can be done where I just sit in the movie theater. I like to do that in the summer. Like, it's hot these days in Georgia. And especially if I been a lot of time outside, sometimes I just want to come in and I want to sit in the dark and I want to be in ice cold, right, temperature. And the movie theater is designed to be very cold because we exchange the air quite a bit because, so many people can be in it. So you have to exchange the air quite a bit. So it gets very cool. It's all soundproofed. So you're basically in a refrigerator. And so anyways, and dark as could be. So you can put your feet up, put your head back, relax, and watch the screen in 4K. But it's only 4K and it's only one screen. So, you just pull up one chart like this if you wanted to and relax. Yeah, you could totally do it. Cool. Yep. I'm not in my teens, but I'm raising teenagers. So I didn't grow up with the movie theater as a kid, but my children have always had a movie theater. And am I proud of that? Sure, I provided. Yeah, I provided for my family. So, yeah. Sure. I'm not embarrassed by that. Yeah. Yeah, totally. All right, so anyways, I gotta go. Thank you, everybody. I pushed you psychologically and emotionally today, and I thank you for allowing me to do that. I do want you to succeed. There's nothing in it for me for you to fail. So I think I would like to see hundreds of success stories of people that participate every day here at Forex.Today. The world is waiting for a hero. It might as well be you. People want to hear your success stories. People want to have a role model. They want to have somebody to emulate. So it might as well be you. It won't be easy. It'll be very difficult. It'll be inconvenient. And I don't know. You might as well just step up and have it be you. And we're all cheering for you because you're surrounded by like-minded people, and that's what makes this community so good. So thank you for being part of that. If you could leave some feedback for me on the comments section, that would be really cool. I promise to read it today. And I'm going to run an ad so that YouTube can make money. Santiago says, question, is there an alternative site to see the Quant-Box training videos besides YouTube? Quant-Box.co. Those are the only two places. Okay. If you want to see today's video, let me show it to you. Let me show you before you go. I'll answer that question. So you go to youtube.com at Quant-Box. Ooh, I'm still zoomed in. Sorry about that. Let me get out of that. Okay. And here we go. Here's me. Look, same shirt, same ugly hair. And in 9 minutes, so you can get a notification, today's video will be released. Okay? Oh, how-to videos. Oh, well, let me show you that. Let me answer your next question. Quant-in-a-Box.co. Okay, I'll go to the dashboard. How about this one? Here's a training course. Here's an overview of Quant-Box, an overview of the dashboard, an overview of the scorecard summary, an overview of the smart money tracker, an overview of the heat map, overview of the calendar. How about scorecard analysis? How about scatter plots? Before we move on, I actually want to go back to the home. Okay, again, when you access the database, this is the home page. And I want to cover this scatter plot because this is a little bit different from the rest of the data that's presented to you. What we're going to do next is I'm going to show you these currency pairs and how Quant-Box gets to its conclusion of, should it be bullish or is it expected to be bearish, and, and so forth. So I'll move on, right? Probably, hope so. It's multiplication, but this is an important aspect of calculus as well. And this is what we're doing some calculus for us, but let me explain. Yeah, well, I'll keep it going. You're looking at this truly in a grid, okay? And you want to look at everything up and to the upper right quadrant. Every little asset class that you see here in blue, in that upper right quadrant, Quant-Box expected it to be bullish based on all its analysis fundamentally and technically, and comparing all those fundamentals with the other asset in comparison. Everything in here, like Euro Kiwi, USD CAD, USD Yen, Euro CAD, Quant-Box has expected it to go up, and they are up. So that is good. These are all the things that were supposed to, quote unquote, go up, and they did go up. Now, the higher up they are, and higher and up to so anyways, right, so it's going into better. What's happening there so that you understand what it tells you. And this is a key component of what we do. And now, since that video was made, Quant-Box has upgraded the scatter plot because it's so important. It's so unbelievably important that we've updated and improved it so that you can use it. It's one of the fastest ways of measuring what's happening in the market, long-term versus short-term. Okay? Keep doing this. There we go. So this is what it looks like now. First of all, we have full screen. Okay? And I've labeled it, and we actually have the vertical as well as the horizontal line, but bullish and expected, bearish and expected, bearish, unexpected, bullish, unexpected, right? So it's better labeled, it's fuller screen. But once again, right, there's two axes. The long-term economic fundamentals of how these economies are doing and what you would expect the currency pairs to be doing. Do they have a positive score or do they have a negative score? And then are they making money today, right now? Or are they losing money today, right now? So this bottom score is long-term. The vertical axis is short-term. So the today reality versus the long-term should be. Now you're like, okay, well, is it important to know that oil is way up today and Quant-Box is expected that to be up on the long term? Yeah! Because on days where it's bearish down here, but unexpectedly bearish, what does that look like on a technical chart? A dip, son. Yesterday, oil was at 80. Now it's at 84. Maybe you should have bought the dip, bro. Well, now it's bullish and expected. Too late. You're late. Too late. Yesterday, you might have seen oil down here and you would have said, oh my God, it's got a huge positive score, but is performing very negatively today. It's bullish, but down. Yeah, don't we call that a dip? Yeah, it's out of position and plausibly an opportunity for the future. And now the future's here. Now it's too late. You should have known it yesterday, but you wouldn't have known it unless you were able to compare long-term fundamentals with short-term market sentiment. Quant-in-a-Box does that all day, every day, easily. And if you have trouble reading it, okay, we do it this way too. Short-term, medium-term, long-term by analyzing the yen, gold, dollar, S&P 500, 10-year T-note, and the VIX. Cool, nice. Great, short-term versus long-term. All you have to do is pay money, and now you're in the game like an institutional investor. It's only money. It'll cost you some money, but maybe you can make better decisions. I don't know. But it might solve some of the decision-making process. It might aid you in making more informed decisions. It might give you confidence. It might let your winners run. Or you do nothing. What if, man, I already built it. I'm already paying for it. It cost me a lot of money, thousands of dollars a month just to run it. It cost me many thousands of dollars to continue building it. Whatever. Use it or lose it. Anyways, have a wonderful day. You're good people. I like you. Peace on earth. May the pips be with you. May your profits be above average.